Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Welcome everyone back to the new season of the Week in Italian Startup with Nicolò and me going through the latest news. Welcome back, Nick.
Ciao, Jack. Welcome back to you. Hello, everybody.
All right, so let's jump right into after the summer break, which in Italy is pretty much like static in general on different levels. We still have like a few great news, I would say, for the ecosystem. Starting from Deliveristo, marketplace for restaurants, raising 7 million euro in a round led by Vertis, but also followed by Azimut, United, YAG, and other business angels. So that's a great news also.
Yeah, it was a news from early this summer that I missed completely in the latest issue before the break. My apologies to the team and to the investors. I really needed a break, that's for sure. An important round in another startup operating as a B2B marketplace for restaurants. There are a few operating in Italy, at least a couple of competitors that comes to mind, and a couple of big names that launched heavily in Europe. Choco is one, I believe, another one in Spain. The market is for sure quite huge and open for innovation, and the proof is we are here and still raising money after the pandemic. So very interesting round. We have the usual suspects actually in Italy. So Vertis is one of the most well-known funds in Italy, VC firms. United was an investor in Deliveristo, if I'm not wrong before. Italian Angels for Growth, the usual suspect, investing in a lot of rounds. So, the usual ingredients here.
Yeah, I mean, the business definitely is striking a very interesting nerve for the Italian ecosystem in the sense that the restaurant sector is highly analogic, if you will. So order for restaurant have traditionally been done with pen and paper, literally, and that's the way people definitely behave. So the fact of digitizing that aspect is very powerful. And what really shows traction is the massive amount of both restaurants on the platform and supplier that are on the platform. So maybe let's pay a little bit of attention on that, because that's a super interesting element. So we have about 1,300 subscribers to the platform. And I believe that the total number of product is about 60,000 products, which is impressive, really. And that's definitely one way to go through digitization. So it's an awesome traction. It's an awesome proof of traction.
Yeah, and if you think about it, that's still a small fraction of the market. So in Italy, there are probably 180, 160,000 restaurants, more or less. So that's the order of magnitude. So here we are touching 1% of the market. So there's a lot of room to grow. And for sure, a restaurant doesn't have the groceries purchase profile of a family. So we're talking about big numbers here.
Yeah.
So once you get a customer, that's an important revenue.
So talking about the investments, I thought it was interesting to see how exactly Vertis has been structuring the business. So Vertis has been a big player in the Italian ecosystem. Again, one of the oldest SGR investing in startup, I would say. So here's a brief overview of the structures of the firm. So it's an SGR, as you know. Basically, two main vehicles doing private equity, Vertis Capital and Vertis Capital Parallel, which tells me that essentially they're moving on a parallel track. But then we also have about like five different funds. A lot of them actually focus on scale-ups. And Deliveristo is exactly one of the company target of the Vertis Venture 5 scale-up. So, which is basically following the original strategy of Vertis Venture 2 scale-up. So again, business that have some proof, they have some traction, they have some great result, and they're really on an exponential growth curve. So that's very interesting. So just to give you some more information on Vertis Venture 5 scale up, they basically have an allocation of 41 million euro. It's kind of a young fund. It started about just 1 year ago, August 2021. And it's about basically investment. They have like 5 years of investment period. And basically the whole thing is about like 10 years, the whole fund. So that's kind of a traditional structure of and in terms of timing. Interesting in the sense that it kind of supports the strategy from a previous fund. So that tells me that it's been interesting, and definitely it's been like a fruitful way to invest. So that's what's your thinking, Nick?
No, I totally agree with you. Vertis was probably one of the first VC firms who actually expanded their investment scope to private equity, to real private equity.
So wait, they started with VC and then they did PE?
So that's a very good question. I need to check it out. I always known them for the VC operations. Sure. So I'm not 100% sure, but I believe that private equity started just after VC. But I'm open for this. Is just a memory. I'd probably be in a week. I'll be here correcting myself. But still, of the big traditional VC firms in Italy, is the only one that comes to mind with a specific private equity fund. Because neither United, P101 or Indac venture into specific private equity. Probably no chess, but I'm not sure. And the other interesting thing is that they are doing scale-up investments from smallish funds. So they probably have fewer investments per fund.
Interesting.
The other interesting thing is that the last one that you were showing is ending in 2027. So it just completed the investment period.
Correct.
So we've only saw 4 logos, but there are probably more investments. I believe that they did 1,000 or something more with that fund.
Yeah, I mean, I'm checking.
Very well known, actually.
Good point. That's a great point. I think Vertis Venture 2 scale up. So as it shows, looks like there are like definitely like 4 companies. Actually, no, it's a little bit more, but it's a I mean, it's not properly shown, but it's probably, I would say, maybe like 10 to 12 looks like, more or less. And some of the big names in the ecosystem that have like very good validation. Milkman, Bazzo, it's also exactly, so very well known companies here. Fit Prime, of course, and so very well known companies here. Very cool. All right, moving on. Other big news in terms of round, I would say ItalianWay. So ItalianWay is a short-term rental startup raising 2.5 million euro from a syndicate of investors. So ItalianWay is kind of trying to play the card of short-term renting, and in specific areas, so very touristic areas, I think there is some form of interesting like selection procedure. So it's very, very niche in that way. And with the reactivation of the travel and holiday business, that's a good moment for them for sure. So yeah. Awesome job raising about like 2.5 million for sure. Yeah.
The numbers are interesting. Did you see the numbers from turnover in 2021? 21 million.
Yes.
Expected 44 million in 2022.
I thought that was incredible. I thought it was incredible. Yeah.
Considering that what was 2021?
Correct. 2021 saw turnover of around 21 million euro. And when I read that, I thought that the kind of the fundraise was kind of small now. I mean, once you know the revenue, maybe the fundraise is like, oh, maybe they could have gone even beyond the 2.5 million, I would say.
Well, that's a fair point, even though So turnover 21 million. So I don't know whether that's
exactly
really revenue. So rental. So I don't know what the number is.
Sure.
It might be the overall economy that they engaged with the platform. But still not too shabby. And I was taking a look at the properties. There are quite a few very premium locations.
Yes.
So very nice. Yep.
So probably like a higher, like average ticket for sure, and very interesting play for sure. That's very awesome. Okay, cool. Let's move on to what I thought. I thought it was interesting. Also, ParkingMyCar. So ParkingMyCar is a booking system for parking spots, raising a little bit more than €500,000 from a syndicate of investors. So every month, what we see is really like smaller like companies, holding investor groups, kind of moving really fast to place bets in startup and in considerable sizes, if you will. So it's a very good sign for the ecosystem when we also have like a smaller player placing bets on different companies. So in the case, for example, of ParkingMyCar, MTI Holding, I've never heard about them. Probably it's a more industrial, looks like a more industrial holding. So also placing bets in that sense. I thought it was particularly interesting for sure.
Yep, I agree with you. It's actually happening more often than before. That in particular these seed rounds, the $500,000 to a couple of million, see a lot of non-traditional VC investors joining or leading the rounds. And that's good. That's good because you see a lot of diversification, a lot of capital that are supporting more startups, and in a sense supports the professional investors in setting up later stage funds that we really need, because there is more deal flow and more quality in the startups that are being supported in the early phases. So very good. And the last bit is that from the name of the CEO, Matteo Elawak, I would say that we are looking at probably for an Italian founder for foreign origin. So another interesting sign.
Yeah, good point. Like second generation native. That's interesting. Super interesting. Yeah. Awesome.
I'm really happy of that. So that means that there are still some capacity to integrate, to develop, to grow as a nation.
Awesome. Good for integration, good for the ecosystem for sure. All right, switching gears a little bit, talking about acquisition. So Vedrai acquiring 60% of Indigo.ai. So we've met Vedrai a few times back, and they've been basically some of the big providers of artificial intelligence applied to business. So what do? Is they basically crank out the data with AI algorithm to provide insights for businesses on different scales. So now they just essentially acquired a majority stake into a natural language AI startup called Indigo for the creation of chatbots and probably integration also in the kind of services that they want to provide. So it's a very good example of a growth by acquisition. I wouldn't call it a tangential business because they're pretty much on a parallel route, I would say. So that was very well integrated.
This is not the first acquisition that they make. I remember that the Vedrai startup is quite young. The founder is young, and Vedrai is probably a couple of years in terms of age.
Wow.
They raised 2 different rounds. This is, I believe, the second or the third acquisition they make. So they're quite aggressive in pursuing their growth. And another thing that you were saying, and totally right, but the interesting angle they're taking, or at least their publicity taking, is that they're offering AI technology to small and medium businesses. So usually businesses that do not directly invest in AI or in that type of tech. So interesting positioning.
And in terms of product, what I was checking is that they really try to make it accessible through through putting a lot of effort in UX. So basically, if you check the product that they push, they're basically kind of making product anthropomorphic. So there is like the AI basically they have names depending on the kind of insight you're looking for sales insight. There is a character for that, for accounting insight, and then you can play with this kind of product. I thought it was very interesting in terms of how the experience is gonna look like. So it's not a spreadsheet, it's not like impersonal. It's like catered for an audience that kind of wants to relate in a different way. So I really like the angle of trying to make it in a different way to use the product. Yeah, that's I thought.
That's a good point. It sounds a bit like a marketing stunt, but still.
Yeah, I would love to see like a demo and how exactly it works. If I can really talk with the agent, with the AI agent, and how it interacts, that'll be so cool. But yeah, good direction for sure.
Yeah, I can imagine having a meeting with a few AI agents, and as the marketing agent is talking, and the sales agent interrupts the presentation, and says, "Wait."
Exactly.
The problem is not market. The problem is in sales. See,
and then make them interact with each other, and then humans are out. That's it.
And that's how the matrix started. That it was probably an engineering AI and the sales AI discussing about what to prioritize between sales and products.
That's awesome.
That's how it all started.
That's awesome. All right, talking about product, what's the deal with PLG? That's very interesting discussion. So in your newsletter, you point out a very interesting article from Gil Dibner about PLG now, PLG later, or PLG never. So for the listener, PLG stands for product-led growth, and is essentially a new way of thinking about a business model and business growth in general. So basically, just to give like a 30-second summary, the business world have seen like some major shifts, starting from the 60s, where the growth was led by sales, and then 80s to 90s to early 2000s it was marketing led. And now it's kind of, it's the product, the user-centered moment for growth. So that's the idea, right? I have a few comments, but I was wondering what you think about it.
Oh, well, I believe it was an interesting article because there's been a lot of discussion going on about PLG, so whether it makes any sense, it's interesting, not interesting, and so on and so forth. So it was a nice way to start a reasoning, at least for the reader. Mm-hmm. I love the concept, also the idea that there is the product that basically drives its growth without traditional sales or marketing entering the game. It puts you in the position of thinking heavily about the product and the quality and what's delivering to the user. Mm-hmm. Even though in another sense, traditional marketing would say, the product is one of the 4 P's of marketing.
There you go.
So
I agree.
What are we talking about? So,
that's exactly my comment. So this is like a fake problem, I would say. How in philosophy sometimes people build arguments around product and they make themselves up. So, and it's not a true problem. It has this kind of taste in a way. So it has always been about product at the end. But
I totally agree.
Yeah.
But the problem probably is that when there are teams with founders not formally trained in marketing in the broader sense, you tend to think of marketing about just outbound advertising through Google or social advertising through Facebook or Instagram. And that's a tiny bit of the concept of marketing. So
I agree.
This way of breaking down the concept and putting the product the product part of marketing into its own separate silo. Yeah. Let me call it silo. It's not a silo, but area of importance probably helps in reframing something that's old, but it's being missed in some way today by probably many teams that mistake outbound advertising for marketing.
Absolutely. And I mean, it's nice, I think, to actually think about this again sometime, just because the truth is business is fluid. It's very tough to prioritize what do you need, because actually there are many. It's like a human being, okay? So the heart is better than the lungs. Like what are you gonna take if you have to choose? I mean, that's not a non-question again, exactly. So, but it's cool, kind of going back to basics. I enjoyed that. I enjoyed the discussion.
Oh, good.
Nick, all right. So to close, let's talk about Richmond, which I thought it was an interesting operation that you mentioned in your newsletter. How e-commerce, like fashion e-commerce platform Yox, essentially has been like the target of an operation between Richmond trying to unload their shares and other investor acquiring them, among which Farfetch, which is another fashion, like huge fashion retailer. So what do you think about that? What's your interest into that?
Well, I mean, Yox has been the only Italian unicorn for like 2 decades.
Yeah.
So it's not a startup anymore. It's been through.
It's not Italian anymore. It's not even Italian anymore.
That's another fair point. But still, it remains attached to Italy for at least some romantic reason.
Exactly.
So seeing this series of latest events is a bit, I wouldn't say heartbreaking, but still, Richmond. It doesn't look like a fire sale, but still it's taking a 2.7 billion write-down of the investment. It's selling, if I'm not wrong, 50-point-something% of YNAB is changing hands.
Correct.
Farfetch and what's the other?
The other investor is basically a holding like a vehicle company from an entrepreneur from Dubai, which is essentially the guy behind the Burj Khalifa, so the real estate there, Dubai Mall, and also essentially one company which is called, I believe it's called Noon. Exactly.
Okay. Sorry.
Noon, and Noon is basically the Amazon of the like Dubai and the Emirates, and so it's a very successful guy for sure. Very, very business wise, very, very like capable person. So interesting play. What I thought is that Richmond is getting a good deal because actually there is also an exchange of shares going on. Richmond is getting Farfetch shares. Basically depending on how exactly the deal is going to perform and Yox is going to perform. So I thought it was cool. I thought it was very smart. Too bad for the write down for sure. But it's an example.
It's still some kind of a paper loss still. So as you said, the exchange shares. There's,
correct.
There's some more stuff going on in the next few years. An escrow, something like that.
Yeah.
So whatever.
All right. So
the story is not over for you.
Exactly. Let's move on beside the nostalgic news. And Nick, thank you so much for joining, and I'll see you next week.
Ciao, Jack. Thank you very much. See you, everybody.